In this video, I want to talk about Google. Alphabet, they just reported earnings and the stock is up on a pre-market level. In this video, I want to talk about the report. I will analyze it, add some comments here and there because you have a few adjustments to really understand the real earnings power from this business. We'll look at the slides. We will look at a beautiful Twitter thread from Wasteland Capital, and you will have my opinion about what I think about the Google right now. Google is maybe my second largest position right now, so of course it will make a huge impact on my performance, and I'm pretty happy with the results so far. So in case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, including thanks to Google. I first bought my Google shares back in the days in 2018, and I just held. Okay, so now for the past few weeks, the stock has been on a run and you had a lot of momentum. What is really surprising is this momentum doesn't stop. And actually it is accelerating now. Google is ruling over the world. Google is the king of AI. Well, 6 months ago, the sentiment was not the same. It shows how prices drive narratives once again. So I want to start with the report here. If you look at all the key metrics in the report, you will see that the revenue is growing, the operating income is growing, the margins are still high, and you have a massive net income increase. And I want to start this video by adjusting some numbers because not a lot of people are talking about this. Okay, so the results from Google were great. But this quarter, for Q3, you had a fine. Look at this. Total operating income increased 9% and operating margins were 30. Excluding the $3 billion charge related to the European Commission fine, operating income increased 22%. What it means is this quarter, Google had to pay a fine to us European guys, unfortunately. And if you adjust for this fine, this is what the real operating income is, because this is a one-off expense. You will not have this expense every quarter, right? So it's 3 billion. It's 10% of the operating income. It's meaningful. So if you adjust this to just understand the core operations of Google, what are the real margins? Well, they explain this in a paragraph. Page 8, at the end of the report, the revenues are going up by 16%. The operating income is up 9%. But if you adjust for the European Commission fine, you add back $3 billion, which means your real core operating income is not $31 billion, it's $34 billion. And if you adjust to really understand the core operations, how Google is doing, you don't have a growth rate of 9%, you have a growth rate of 22%. What it shows you is operational leverage, okay? Revenue growth rate 16%, operating income growth rate 22%, which means the margins are not 30%, but if you account for the adjustment, the operating margins for this business are 34%. So a meaningful increase, more than 1% increase for this business model. What it shows is operating leverage. And I believe most of it is driven by the cloud segment. So that was for the first adjustment. You don't have a lot of people on Twitter talking about this or YouTube talking about this. So I wanted to add some value to the Twitter and YouTube environment here. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Second adjustment to really understand Google is, maybe we can show this. Other income reflected a net gain of $12 billion. Okay, maybe you know Google, you know what they do, but do you know that they have a portfolio and they invest in companies? You invest in Anthropic, you invest in SpaceX, you invest in plenty of private companies. After all, this company is called Alphabet, so they are making bets to generate alpha. And if you look at their balance sheet, you have plenty of cash. How is this cash used? Either you can do buybacks, which they are continuing to do, or you can invest in private companies. And Google is investing in private companies, which means you can make profits out of a portfolio of companies in your balance sheet. And now you have other income reflected a net gain of $12 billion, $13 billion, primarily the result of net unrealized gains on our non-marketable equity securities. The most famous investment Google is making is on SpaceX. They have Anthropic and SpaceX. Maybe these are the two big investments they have done in the past. So because the value of SpaceX is going up, you have unrealized gains. And accounting wise, you have to put this as profits. Okay, which means if you scroll down here, revenue, where is it? On the income statement for Google, the revenues are going up by 16%, cost of revenue, R&D, sales and marketing, this line is not going up, which means Google is not buying their growth, which is very bullish. You don't have to hire a lot of people to generate more capital, more margins, more money, which is really good. And this is it. Other income, you go from $3 billion to $13 billion. You have $10 billion that are added out of thin air. And based on this, obviously, the net income is fabulous this quarter. The net income on a year-on-year basis, the net income went from $26 billion for last year to $35 billion this year. So it's a spectacular growth rate. I don't know, 30% growth rate. Wonderful. This is what all the headlines are talking about. All the media is talking about. 30%. Wonderful. And if you take into account the small buybacks they are doing, they are buyback, 2 or 3% of their shares, you have a diluted net income per share, earnings per share that went from 2 to 2.8. So a massive increase in earnings per share. Let me calculate it real quick on my calculator. For the earnings per share, you have this divided by this, which means 35% growth rate in earnings per share. The second adjustment you have to make is this line, the unrealized gains, because as stock pickers, stock investors, we want to invest in businesses. We want to invest in core operations of businesses. So we want to understand what are the core operations of this business. Okay? Because maybe this is fake. What if we have a recession next year and the value of SpaceX goes down? Well, instead of having an income, you will have an expense. So, and at that time, plenty of people will make the adjustment, I'm telling you. So on the way up, people are not making the adjustment because numbers go up. But on the way down, they will want to adjust. It's always the case, actually. So let's adjust for this unrealized gain and see what is the real earnings power for Google. So, because it's so extraordinary, let's assume this line is not moving at all. From $13 billion, you can stay the same at, let's say, $3 billion, which means you have to remove $10 billion. And if you remove $10 billion, the net income goes from $26 billion to $25 billion. So if you account for this adjustment, the adjustment in unrealized gains, the net income is flat. Okay, so now we can combine the two adjustments. One, the fine from Europe, $3 billion more. And two, the adjustment for the unrealized gains of minus $10 billion. So plus 3, minus 10, that's minus 7. Okay. You take $35 billion of net income, minus 7, that's 28. It's always helpful to do all the calculations in your head, right? You don't need a specific Excel to do the work. The best investment opportunities are done in a couple of minutes in your own head when you can do the formula. So I hope I'm clear with my explanations, but you add back $3 billion because of the European fine, and you remove $10 billion because of the SpaceX investment, Anthropic investment, private companies investment. Okay, so that's a -7. So the net income apparently officially is $35 billion. You remove 7, that's 28. Yes, that's 28. So the net income for the core operations of this business has grown to 28. 28 divided by 26. You have a growth rate of 7, 8%. Not that wonderful. You go from a growth rate of 30% to now 7%, 8%. Not that exemplary. What it shows you is Google is still performing very good, very well. Google is still thriving. The cloud segment is still in full force and now profitable. But the numbers are not as good as people are talking about, are discussing now. So this adjustment is huge. And actually, I want to show you something else now. You have a great post from Aria that says Google trades at 33 times trailing earnings if you strip out non-operating income, which primarily includes the unrealized SpaceX gains a few quarters ago. Thoughts? So about the valuation, if you adjust for this extraordinary revenue stream, earnings stream, you have a PE ratio of 33, which begs the question, is Google cheap? And I would say Google is fairly valued now. Fairly valued, not necessarily expensive, but not necessarily cheap either. So fairly valued, tiny bit expensive, I would say. For all the people that want to sell Google now, I can totally understand. Now that the stock is up massively to 300, if people want to trim this position to buy other stuff that went down, including Meta Platforms, by the way, I could understand this move because now people are a little bit euphoric. Now, second thing I want to show you is this amazing thread from Wasteland Capital. If you don't follow this account, please follow this account on Twitter. One of the best accounts you can follow on Twitter. I've been a follower for so many years. I love the content they publish. It's absolutely great. And you have every earnings season an analysis of the Magnificent 7 companies. So let's see what they have to say. You have, how can I put my face? Where can I put my face? I have no clue. Google, more acceleration, revenue plus 16% to $100 billion, up from 14% last quarter. Revenue is accelerating. Cloud is growing 34%. YouTube is growing in full force, plus 15%. Search plus 15%. So yeah, okay, I would not say this. Earnings per share is up plus 35%. Again, people are talking about the growth rate of earnings of 35%. Now you understand the difference. Please don't make this mistake. Always adjust. Officially, the GAAP numbers, this is a 35% growth rate, but please be cautious, okay? I'm not saying Google is bad. I'm saying be cautious because you have a couple of adjustments to make. Operating margins are up on the last quarter. CapEx is fine. Gemini has 600 million monthly active users. This is wonderful. The king of full stack AI. So, you have an acceleration in revenue. You have the Google Cloud segment that is now thriving. If you look at the Google segment for Google, the cloud segment, this is absolutely wonderful. You have a CAGR up 30%, 40% CAGR, compound annual growth rate for the cloud revenue. And at the same time, the cloud segment is becoming profitable. Before, a couple of years ago, it was not a long time ago, it was like 3 years ago, they were burning cash. And now they are profitable. The margins are turning up. Can I actually have the margins for the cloud? No? Okay. You clicked on this video, I will give you some value. Let me create this custom metric. Let me create add custom metric. I want to see the percentage, which is the Google Cloud EBIT margins. Okay. I want to see the cloud operating income divided by the cloud revenue. That should work. By the way, I'm using this website called Fiscal AI. you have an affiliate link, a discount code in my description. You can just click on the link and register. It will be cheaper for you. It's a website I've been using every day for years now, and I could not recommend this website enough. Okay, this is what you can expect on the margin side. A couple of years ago, this segment was not generating any cash, burning cash, and now since like they have turned profitable in 2022, 2023, finally, and since then, margins are continuing to go up. This is why the revenue from Google is only growing 16% per year, but the operating margins are going up much more than this, 22%. You have operational leverage because of this improvement in margin every quarter. And what we have learned yesterday with the earnings report of Google is the cloud is accelerating. They have a huge backlog of 2 years of operations now. So absolutely ludicrous numbers, fascinating numbers on the cloud segment. They just signed plenty of contracts. They are increasing the capex. They have much more clients. They have much more demand. Google is in full force right now. Let me continue on this thread. The full stack approach. We have $100 billion revenue per quarter. This is just phenomenal. The key point is every key business line accelerated. Yes, search accelerated. Now you can include much more ads on Gemini, much more ads on YouTube, much more ads everywhere. You have a segment from the cloud that is accelerating again. Everything is trending in a nice direction. Will he mention the capex? Yes. While capex guide increased again to $90 billion, growth is spend moderated. And remember, cloud backlog grew plus 46% sequentially to $150 billion from $100 billion last quarter. You have immense capex, but immense demand. And what is the revenue for the Google Cloud? You will see what I'm talking about. You have cloud revenue of 15 billion euros. The amount of backlog they have, if you compare some numbers, is just immense. Completely immense. Okay, very well. Underlying EBIT margin was 34%, showing solid leverage, good cost control. Operating cash flow is up. Yes, the story is still intact. And I remember an interview from Sundar Pichai that was released a couple of days ago about their state of Gemini, how they delivered Gemini, and they were actually building an AI tool, a Gemini tool back in the days. And it turns out OpenAI released ChatGPT. So Google was in a hurry and they decided to take their time to deliver a good product. When you are Google, you face some risks that startups don't have. Meaning, a startup can release a good product and it turns out it's a fail, like OpenAI and ChatGPT. If it fails, it's okay. People will forget the startup. But if Google had created the first LLM, the first ChatGPT, and had failed, it would be a reputational risk. So they decided to take their time and do things properly. Well, turned out they have failed with Bard and woke images, but that's life. Now they have the product. They have taken their time. They have Gemini, and this is working wonderfully. Right? You can generate plenty of things, images, videos. The text is wonderful. It's free. You have 600 million users. The paid version is great. Seems like they were late to the party, but because of the distribution Alphabet has, seems like Alphabet is winning the AI race. And this is growing in full force. And Google is making money. Google is profitable, not like OpenAI. OpenAI needs to raise money to go public, to raise money for the IPO, because they are burning cash every year. Google doesn't have this problem because Google is a cash cow. If you look at the charts, Google has always been largely profitable, always filled with the fortress of cash, generating tons of free cash flow. So they can be late to the party. They can have this cash burn to invest in the best product, the best service, and it will work out okay. So a beautiful quarter from Google. The stock is not cheap anymore. It was cheap a couple of months ago, and Google received a lot of hate. Now it's not cheap anymore. I can argue it's fairly valued or a little bit expensive now. Now the stock is a 45% up year to date, but still cheapest among the Magnificent 7. PE ratio of 27 and PE ratio of, no, not this one. PE ratio of 33 if you adjust for the investments. While the easy money has been made, next level is 330 based on the forecast in the future. Yes, in the couple of days you can expect more analysts from Wall Street raising the guidance for next year, raising the outlook, raising the estimates, and you can expect the bullish momentum to continue. Seems like as long as the business is accelerating, as long as they are printing cash, as long as Gemini is taking more traction, seems like the momentum is still here for the stock. So it will be very funny to see, very interesting to see the momentum until the end of 2025. Maybe we will have a catch-up effect and maybe you will have a strong rise at the end of 2025. What I'm sure of is I own Google. It's my second largest position. The stock has gone up immensely and I will just hold. I will not sell it. I will just ride this beautiful wave, and as long as the business is fine, I will continue to hold. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video, a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.